Right. Relationships. And it all goes down to those relationships. Me building that with the broker. And then, he knew the people at the bank personally. And, we sat down and discussing options, and they offered that. And we're like, yeah, that's, and at what, 4.5%? I mean,
Right.
I can't remember your typical small community bank. And we're like, yeah, we'll be refinanced in less than 2 years, which we did. We were 15 months later, we were financed. So.
Welcome to Real Estate Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here is your host, Anette, Talie.
Welcome to another episode of Real Estate Deal Closers. I am your host, Anette, Talie, and my guests today are Julian Sanchez and Andres Duarte. Welcome, guys.
Afternoon, Anette. Thanks for having us.
I'm super excited to have you guys. I've known Julian for a while now. We go to the same meetups and we hang out at the same conferences. And I am watching him grow, but I never knew Andres. He was the ghost partner, and finally I met him a month ago, and I'm delighted. I'm so happy to have you, Andres.
Thank you very much. Thank you for having us. And I'm the one behind the scenes. I'm the one.
He's the brains of the operation.
No, but yeah, I'm always on my computer just running numbers.
Running numbers. Everybody needs somebody that runs the numbers.
Yeah,
awesome.
Absolutely.
So I would love for Julian and Andres to tell us a little bit about their background. Let's start with Julian. What did you do before, and how did you get into real estate?
I was engineer by profession. My last job was project manager for a large multinational company in the energy sector. But I started real estate just out of, first time in my life, I had some extra money. Like, hey, there's surplus in the bank account. So research, real estate seemed the right way. I was looking into it, learning, reading books, listening to podcasts just like yours. Met Andres at a meetup in Del Rey, the one we've been to before, and he was doing. He already had some properties in Ohio and wanted to go bigger into commercial multifamily. And I said, "Hey, that's what I want to do." And we started looking at deals together. Took our first one down. Actually, it's today, 3 years ago today, we closed our 940 in Illinois.
Right.
But and that was my background. And nowadays, I mean, this is what we're doing full time, just acquiring more properties and trying to looking to grow the business.
Awesome. So what about you, Andres? Tell me a little bit about your background and how did you get into real estate?
Well, my background is in finance. I've been working in Wall Street for multiple years, more than 16, 17 years of experience in running numbers and all the stuff with Wall Street. So my background is very complex in that sense, running numbers and analyzing deals and stuff like that. And I started managing money for people, high net worth individuals in South America. So we try to, in my spectrum, that looking at possible investments, there was always the opportunity to just go into real estate. And because of that, they offered the institutional money, like REITs and stuff like that. But I said, well, why we don't try to go directly? And that's how I started in real estate, buying properties like that for myself and my investors. And the rest is history, pretty much. We've been doing it for the last 4 years, more or less. And I met then Julian, and then we tried to just look into the commercial side. And that's where we are right now.
Awesome. And how many units do you guys own together right now?
Right now we have 100 units on apartments, and we are closing on an ALF, an assisted living facility. And that
71 bed.
71.
That's awesome. That is awesome. And I'm always preaching to network and to go to meetups and to meet people. And this is an amazing example of how just going to a meetup on a regular basis, you guys met there and now are partners and buying real estate. I personally have met a couple of my partners on the meetup also. So it's an amazing way to network and meet people that are serious about investing.
Yep, absolutely.
Yeah.
The Deal.
So let's talk about the deal. What deal are we going to talk about today?
Well, we had 34 units in Jonesboro, Arkansas that we closed May last year, and then recently came full cycle now with it a couple months ago. Finished the refinance. We had some investor money in, returned our investor money out, had some refinance proceeds for ourselves, and still continue to own a cash flowing asset.
That is amazing, but let's digest this a little bit easier. So how did you find this property, Julian?
It is, Andres have done, market studies, looking into where should we invest next. And Arkansas is a great state in terms of it's very landlord friendly. So it's a great place to invest in that sense. And particularly Jonesboro, the city we're invested in, it's a small MSA, but with a lot of growth happening. And it has for the last decade or more. So he found that. We went to look at some properties. Typically, I went boots on ground, looked at a few deals first, met some brokers, established those relationships. And at first we were looking at one big deal, 106 units. Long story short, that fell through. But then I kept that relationship with Spencer, our broker, who basically this deal was a bank foreclosure. The bank came to him to sell it, and he basically just kept it for us. This was going to be for us, and he didn't show it to no one else. And that was the great part of it, the best part of it, because it was a hairy deal. It was a lot of renovation needed, et cetera, but he didn't market it out to no one else.
And that's amazing. So, a lot of the deals are, found with brokers. And I think, forming those relationships are so important, right? For you to find this deal. It was off market. You are the only one who got it.
Yeah, all our deals have been found through brokers, and I've done a little bit of the research and homework to skip trace and call owners myself and done that. I haven't had any luck. All our deals have come from good broker relationships.
Amazing. And Andres, tell us a little bit about the market research that you did. What do you look in a market when you are looking for opportunities?
Well, pretty much it's just looking the growth of the market. It doesn't matter if it's a big market or a tertiary market like Julian just mentioned, but the fact that it's growing, what is the unemployment rate? What are the projections of growth? Why are people moving in or out of the state? And all that data is available online through census.gov or different things like that. So we were looking into this, and that specific town specifically, for example, the unemployment rate is much lower than the average nationwide. So that was something very interesting. I was looking what was the actual employment, how many companies were employing over there. It's not just one company employing in town, even though it's a small town, there are multiple companies employing there. So that was another factor. And just see what the income stream is from investments, from earned income, what is the main income stream for the population there. That's pretty much what we look into that. And that's why we like Jonesboro, Arkansas in that sense for that investment.
Awesome. All right. So now you have the property, you found it. What asset class was this property?
It was, multifamily. It was 34 units, ranch style.
A, B, C?
Oh, that's what you're talking about.
C minus, almost D.
Almost D.
The area is in a C plus, B minus area, I would say.
Yeah.
But the property was totally distressed. I mean, it was.
Well, it was a foreclosure, so that was kind of like your goal, to take it from there and move it to a C plus or maybe a B minus.
Yeah, fix it up. There were squatters and many of the units, I mean, and it was probably what, out of the 34, there were probably, I don't know, 12 units occupied, give or
Wow.
take. Yeah. And then, yeah, a few squatters in the others. No one paying. The bank just basically didn't care if they collected or not. So, people got used to living for free. Then we had to evict through COVID. It was fun.
So how did you get rid of the squatters? Because I always hear that squatters are a big problem.
Yes, they were a big problem, but we just property manager. Let me see. Yeah, local attorney. That was a difficulty because they had to get served in Arkansas for you to evict somebody. Someone has to physically give them the notice, and many of them just weren't. They're professionals at this, and anytime they were going to look for them, they would hide or not open the door and this kind of thing. But ultimately, it was just, a big attorney cost, but it got taken care of after a while, after they did some damage to the properties, broke a lot of windows, stole copper out of the AC units. What else? Yeah.
It's funny because not for this property, but in another one, we had the same problem. And the first thing that we did was just to offer them money, cash.
Yeah, we did.
So we'll give them
Cash
couple
for
$100.
keys.
Yeah,
did.
and just leave now. And they were like, most of them like, yeah, I'll do that. so that's an option as well.
That's
Yeah, I
always
did
an
that
option.
in a property and they were drug addicts and I didn't know until, they moved in and then like a police neighbor was like, hey, they are like doing drugs in there. I'm like, really? I mean, I was so naive. So I was just went one day and I'm like, hey guys, if you move out by Friday, I will give you your deposit cash. And they were like, okay, we're moving out Friday.
That was what we did in Illinois. That was our first deal. But yeah, we just, because the whole building needed to be redone, everything. So we just went to the 5 tenants that were in the building. Hey, was $400? Hey,
500, something like that.
Or 500 if you're gone by next week. And we also gave them, and they're like, everybody took it. Yeah, sure. Boom.
Right. So what was the price of the unit that you got and what was the market price of a unit, once you fixed it up?
Per unit?
Per unit.
That's a good question.
Well, it was $865.
Right.
34. So remember, heavily distressed. So yeah, 25,000 per door as it was. And so, yeah, we just recently refinanced. Valuation was 2.2.
65 per door.
So there
Wow. That is like more than twice the price.
That's
Right.
That's how you create value.
Amazing. All right. So tell me a little bit of how did you take this? What did you do in the units? Like, how did you find them? And what renovations did you do to go from a 25,000 per door to a 65,000 per door valuation?
We're talking almost everything. I mean, there were burnt units, 3 burnt units. Everything had to be done. 2 roofs. Let me see. One of them had also the gas was redone. So anything you can imagine. All new kitchens and pretty much all of them. Many, AC units. Many of them have window AC units, the smaller, the 1-1s. But yeah, basically everything you can imagine. Inside had to be done, everything.
New bathrooms, kitchen, floors.
So it was
Yeah,
a
well,
complete-
at the end of the day, I
Full
mean,
rehab.
even though it's a full rehab for these properties, sometimes people think that it's a full flip. And you don't go, when it's a rental, you don't have to go that high in value. It's not entire flip, so you don't have to convince new buyers for that. You pretty much just gonna rent it out, So it's just doing the kitchen, the floors, painting, bedroom, and just make it functional. And with that, we spend like $12,000-$13,000 per door.
Yeah, well,
Doing
it was.
Win that, and then that's full functional, and then that was it. Then the process came to just fill those units up.
Wow, that's amazing. So you got it for 25,000, then you added 12 to 13,000 per unit. So that's around 37,000 per unit, not counting the holding costs because you had a renovation going on for how long?
We bought in May. We're probably all done about April, and then fully filled all the units around June, if I'm not mistaken. And then we commenced the refinance process.
Right.
May or June. Yeah.
Amazing. So how did you finance this type of deal? Because you basically had a building that was less than 50% occupied. You had squatters, and then you had people paying only $400 that probably, were not paying any rent. How did you finance this deal?
The bank did. The bank that they had foreclosed on, that owned it. We had searched different options, but it was in such heavy distress. And then COVID happened. So we had a lender lined up that we had worked with before, that does these kind of deal. They're a large REIT out of California, so they was going to give us the purchase price plus a very large construction loan. But then COVID happened, and they kind of, many lenders, took a break basically from business. The bank wanted to get this off their books. It's not good for banks to hold real estate, and they came back and were explaining the situation. I'm talking with one of the presidents of the bank. It's a small bank. And I'm like, this is the situation. We want to close, but right now our lender just backed away. What can we do? And he's like, listen, we can, if you show us funds and keep it in an account at the bank, for what you will use for construction, we will finance the purchase for you. So basically we had no money down there. And then we raised the capital from investors to do all the rehab.
Amazing. So
Yeah.
You had zero down with the bank? Is
Yeah.
that what you said? Wow.
Yeah.
That is amazing. So, the bank didn't want to own it. So they actually offer you to finance 100% of it as long as you could have money for the renovation.
Right. Relationships. And it all goes down to those relationships. Me building that with the broker, and then, he knew the people at the bank personally. And, we sat down and discussing options, and they offered that, and we're like, yeah, that's, and at what, 4.5%? I mean,
Right.
I can't remember, your typical small community bank. And we're like, yeah, we'll be refinanced in less than 2 years, which we did. We were 15 months later, we were financed. So
amazing. So did you have to negotiate the price at all, or that, they gave you, this is the price and that's
yeah,
it?
it was already, I mean,
But
it was already so low, 25,000 a door, you don't find anywhere nowadays. So we saw what needed to be done, and we had kind of a budget, but it's deals like that. We put the amount of money we did per door, and then you see we more than doubled the valuation. So it's like, we had ample room to screw up per se, or, for contingencies, construction costs, they always go higher. There's always unexpected things. There's always something. But we had so much room to play that we're like, this is a great deal, regardless what we do. Your underwriting doesn't have to be that precise for something like this.
correct.
There was a lot of runway.
And how much money did you have to raise for the renovation, and how long did it take you to do that?
For the whole package, when we did $500,000, when we run all the numbers, including because within that, we actually were looking at the interest that we have to pay to the investors. So when we run the numbers, it was okay, $500,000, we're going to be fine, and that's what we did. We raised those $500,000 at a 10%.
A 9 preferred, yeah.
It wasn't even a preferred, it was just 9 fixed. And the fact is, I told the investor, listen, here's the issue. I cannot offer you, it's a total distressed property. This is not stabilized. So I can offer you a 9% for the next 2 years. And then after that, I'll return all your money back, and you will be part of 10% of any proceeds. And they were like, okay, fine. And we knew that we could deliver before that, and that's exactly what we did. 1 year after that, that's when we refinanced the property, giving the money to our investors. They're very happy because before that period of the 2 years is when I returned the money to them. And that was it. Now they participate just on only 10% of the proceeds, 90% is for us.
Amazing.
But they have all their money back. All their
Right.
investment, they've been returned. They received their interest during this time. And yeah, they continue to own in perpetuity that small portion of the real estate. So the return is infinite from now on because they have no money in.
Absolutely. Yeah, that's a great way because they not only got the return of their money quicker than the 2 years, so their return on their investment was faster, but then they also kept 10% of the deal, and the return is infinite because they have no money invested on the deal anymore.
Yep.
And you guys have also an infinite return because you had no money on the deal whatsoever. So guys, if you are always asking yourself how to get a deal with zero money down of your own pocket, like this is the way to do it. They did it and they did an amazing job. They bought it for 25, put 12 to 13, and then sold it or refinanced for 65. So not only they had a lot of equity, they pushed the value up, but you are now cash flowing, and you had no money into the deal. That is amazing.
Yeah, we continue to own the asset instead of selling, which is, it's not what we're looking for.
Absolutely. So what's your plan with this property? Now that you have refinanced it, you recover all the money, paid your investors, what's the plan for it? What's the exit strategy?
Refi in 5 years again and pull out more money.
Of course.
that's pretty much. We're not interested in selling any of our properties. We want to keep creating passive income that way. So, but yeah, every 5 years we will try to see how interest rates are looking, and then refi, pull out money, and then continue collecting
more.
rents.
Yeah, because everything will continue to go up, and you've seen, we've all seen how much real estate has gone up just in the last, just this year. So, that trend is likely to continue. Whether some people think it's going to crash or whatever happens, real estate always goes up.
Yeah,
but it doesn't really matter even if it crashes, because at this point you are cash flowing, and it doesn't really matter what the market does because your numbers work right now. So they are going to continue to work. And if you have an opportunity to refinance again and pull more cash, that's free money, tax-free money, not only free money, but tax-free money. You don't have to pay taxes on it. So that is amazing.
Yeah, right.
So that is incredible, guys. Congrats on that deal.
Thanks.
All right, so I'm going to ask you now, I want you to share with me your productivity hack. This is the one thing that you have done in your business that has taken you to the next level.
Well, what I can say is that we actually have a property management in-house. And with that is that we are from South America, both of us. And we were fortunate to create a team over there. So pretty much everything is managed down there. Their current wages, which are extremely low, and we can keep that here. So right now, our cost for that property management team is probably 1%. We pay 2-3%. But the actual cost is like 1%. So it's extremely cheap. So you cannot find property managers here that charge you 1%.
That little, absolutely.
That. So that's probably what we're doing. We've been growing the team right now, hiring quality people down there. But these days with technology, that's what you can do, You don't have to have, of course, you need boots on the ground but maintenance and those kind of people. Yeah, of course, you're going to have them over there. But the main core of the property management is located in South America.
Amazing. So you have in-house but remote property management for your properties, and the cost is 1%. Amazing.
And then the vendors are on, they're local, so but they call them if there's an issue, there's whatever, toilet, AC, so they'll just pass on whatever the tenant needs. Hey, go, make sure it gets done, send a picture, video. Get the invoice, pay them. That's it.
So how do you deal? Do you have a 24/7 call, or do you have a schedule? How do you deal with is there any change in time?
No,
9 to
they
5 US standard, yeah, Eastern time. 9 to 5, they're gonna work 9 to 5, and that's it. Saturdays half a day. That's it. Other emergencies or anything like that, it never happens. I mean, in case there's something, I don't know, plumbing issue, unless it's a big, big issue, well, we will have a team over there who can respond. But other than
Respond.
that, yeah, other than that, yeah, it works pretty nicely. And on top
Awesome.
of that, we have Airbnbs, which are run over there as well,
Wow.
with properties here. So that works. Yeah.
That's
In terms of cost,
incredible because Airbnb is labor intensive, right? Like you have a lot of turnover. So, being able to manage it from abroad, it's incredible.
very cost
yeah,
effective.
yeah. I guess the whole idea with this business with real estate is it's not the actual physical labor. It's more like the management. As long as you put a good management team and you just on top of things all the time. We are the type of we are working 24/7, just trying to see how we can facilitate and mitigate problems and just things of that nature. So it's just management. At the end of the day, just management. So we just go when we acquire a property, we just go on site, look for vendors. We spend a week looking for vendors, plumbers, electricians, all stuff, and we have a bunch of vendors, and we give it to the property manager. Here are the vendors. You deal with them. Sayonara.
You have options A,
Delegation.
B, C. So in case one's not available, six, something, you have various options for all of them. So
Absolutely. And when you're having multiple properties with multiple units, you can, start trying the people, and if they don't work out, then the next time you use the other one. You have
we have other.
a lot of options.
And
Awesome.
since we're in multiple states, so we do this work, we do this homework in each new market that we get in to establish those relationships, know the people. You got to have your brokers, your attorneys, all your other vendors we mentioned before. So, because you're going to need them, but that's just the legwork that's done.
Absolutely.
Expert tips.
All right, so now we are in the part of the show where you guys are going to share 3 expert tips, and Julian and Andres are going to share 3 expert tips on how to find capital.
Okay. Wow. Julian.
First, we've done a recent deal that we closed in Ohio. It was just one capital partner. So it goes back to what I was saying, relationships in this business. You just knowing people. And so one guy, a friend in common that we have, Mitch, he had recently sold a property in Denver, and he needed to do a 1031 exchange. He needed to put his money in another bigger deal. So he didn't get taxed on those gains. We're having breakfast at the Breakers, and he mentions that, and I'm like, hey, we have this deal in Ohio. Do you want to come in as you put up the money and we take care of the rest? And that's what we did. We closed on that a couple months ago, 2-3 months ago now. So that was a great, it forms a great partnership, and it's someone we know, and he needed to put that money to work. We needed cash to close this deal, so it worked out well.
All right, so number 1, networking.
Correct. Well, number 2, I guess, is networking. I mean, most of my investors are in Central and South America. So the tip that I would have is how you can help them to bring the money to the States. You just don't say, hey, you want to invest with us, and because most of the people want to do that. They want to invest their money, but they don't know how, the mechanism, the legality, and everything. So you have to go one more step and explain and help them and try to find the connections that they need in order to bring the money here, how they can make the deposit, how they can create an LLC, how they can do that. So you have to go an extra step. I mean, and because of that, they actually trust you even more, because you're helping in things that you don't have to, but it's a good option to do it.
Right. So you're facilitating something that would be really hard for them to do because it takes a lot of research. And, I get the same thing. I have a lot of people that want to invest with me, but they don't know how to do it. So I end up having to, do the research. And so facilitating that, gets you to access to more capital.
You got to be a facilitator.
Mm-hmm. Absolutely.
Number 3, Julian, what else?
Number 3 is, I guess, just, and this is something I actually have not been doing that much, is just putting out there what you're doing, what you're up to, because you just never know. And in my case, again, I haven't been posting much on social media up until recently. I just kind of like my privacy and didn't want people to know what I was up to. But because I started doing that just out of nowhere, a family member who lives in the UK, just approached me out of, I totally unexpected. Hey, I see what you're doing. I like what you're doing. I got this money, just sitting here. I don't know how to invest. I don't trust anything here in the UK to put my money in. Could I invest with you? And we're like, yeah, sure. So, she's part of, we're the assisted living facility we're closing at the end of this month. She invested with us.
Amazing. So the third tip is putting it out there,
put it out there.
Doing. Yes, absolutely. Yeah. So important because people don't read your mind. They don't know what you're doing. And if you don't share, they have no idea. You might be just the solution that they were looking for.
And that's exactly right. Because that's exactly right. You're not asking for money or you're providing a solution to someone that, just had some money sit in the bank, not making any money. We know banks don't make you any money, but instead they didn't know how or what to invest in. And so, you're providing an option, a solution, like you said.
Absolutely. All right, guys, it was amazing to have you on the show. We get to hang out on a monthly basis at least if we don't meet more because we are always on the same circles. And I really enjoy see you guys grow and getting bigger and getting more properties. And I know we're going to do something together soon. So
we all grow together.
Yes, absolutely. So tell people, where can they find you online?
Well, Julian, our website is elancapital.us, ELAN, the word capital.us. My social media is andresduarte.ec, either at Instagram or Facebook.
Okay. Same. Well, the website, my Instagram is jsanchez0510, both Instagram, both Facebook as well. That's all we have for now. Might start a YouTube channel. I don't know. We'll see.
And you can find Julian at least at my meetup the third Wednesday of the month. Yeah. He comes pretty regularly. We cannot get Andres to show up. I don't know why.
You can find Julian everywhere in South Florida, guys. So don't worry about it. You're gonna meet him. If you go to one real estate event, he's gonna be there for sure.
Absolutely, absolutely. All right, guys. If you are enjoying this episode, please make sure to like it and share it on social media. And I think this was an amazing episode. I mean, buying a property with zero down from your own money. Amazing, amazing. So we'll see you on the next episode. Bye.
Thank you, Anette.
Thank you, Annette. Take care. Bye.
This was Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.